Hi there, it's time to use Wyckoff lens to look into Stellar as to where it is and where it's heading. If you're new to my sessions, these are the 3 things that I'll cover. So let's start with the weekly chart of Stellar. Here, we're seeing basically a confirmation. So we have been talking about a while that Stellar is potentially coming down for a sign of weakness at the level close to the yellow key level of 24 cents 50. And it has already happened. Alright, so last week it reached around that level, and this week basically it touched on the yellow key level, looking at the candlestick wick. Okay, so what's next then is potentially an LPSY, meaning a bounce, maybe towards the center line of this downward channel. Okay, it happened back in September and also October. So if we change the line chart, you see this little bulge. So this may be happening right now. No, it may not go all the way to the center line. It can get rejected at this white line. This white line at around 27 cents is the ceiling of the long-term playground zone. So this zone, if you're new to the community or new to my sessions, these zones appear on every single chart of mine. I'm basically tracking from very early stage, in this case for Stellar, since 2017 all the way to now. About 70-80% of the time, Stellar has been trading within this long-term playground zone. And that's why the name of it. And Stellar has basically re-entered the zone last week and currently staying within the zone. So this has happened not too far back. So in June and March, April time, this had happened. Just that those 2 times, they weren't within the accumulation cycle. I considered those low level sign of weakness compared to the one that correspond to the automatic reaction after the buying climax. Alright, so if this downtrend continues or worsen, so because we have these reference points that are not as solid as it can pin down where or how bad the trend can change, because there are still room. So if I change the rate of descent, there's still room for us to make. The reason why I'm putting it in the previous view, a less steep declining trend, is because of these lows and this wick over here. That's pointing towards this kind of picture instead of the steeper one. But it can change and is still within a channel box. Alright, so let's hope this is the case and that this channel box doesn't change in terms of the rate of decline. So when this happens, if it bounces to an LPSY and then come back down to challenge a lower level, which it did in April actually. So back in April, the orange key level at 20 cents was tested. October 10th went through that level, even below the center line of the long-term playground zone, that's about 18 cents. It reached a point at around mid 16 cents and rebound from there. That level is somewhere near the sign of strength that happened back in July 2023, and also these support level back when the distribution cycle finished in 2022 and returned to accumulation. Alright, so that's what October 10th did and indicated to us that the price can still get back to that kind of level. Alright, so that's the big picture. It's not the end of the world. It's definitely more likely to get back to a new accumulation, which the preliminary support hasn't appeared yet. Alright, so I'll give it a 75% chance. 25% chance goes to the rebound go so high that even break above the downward channel and go up to challenge the blue key level 47 cents 50, or even higher, the purple key level of 56 cents. That requires very strong fundamental and macroeconomic environment support that is not appearing right now. Okay, let's go to the daily chart. Here, if we look at what's going on, basically, if what we hit on November 5th was the selling climax, and the 10th, just last week, was the automatic rally, we're going through more tests right now. You can call that a second test or just more tests. So, if we look at this downtrend that started back in mid-July, it was still trading somewhere between the two boundaries, the ceiling and the bottom, meaning the stronger side on the upper half and the weaker side on the lower half, up till October 10th. After that, Stellar has been trading within the weaker half, haven't got a chance to even challenge the center line. Alright, so this is something it has to get past before it can reclimb. Because if it has to break outside of the channel, the very first thing it has to do is to climb to the stronger half. That was supposed to be a test last week. We were discussing about this triangle over here. Okay, and it did not happen. So on the 12th, the day right after our session, the confirmation came that the downtrend isn't continuing, and that's not going to happen. I'll keep the horizontal line because that is potentially going to be the resistance when the price really comes up after it breaks above the 27 cents white line over here. Alright, okay, so yesterday and today found support at this dual support level. Okay, one is the bottom edge of the long-term of the downtrend. The other is this yellow key level of around 24 cents 50. And the volume themselves has been pretty consistent over the past few days, not particularly crazy or particularly low. It's been the average for a couple of months already, since August. Okay, so the climb we're seeing today isn't supported by very strong volume. So that means the tendency of it trading sideways is still higher. So assume more tests, say 75%. The chance for it to bounce up to show a sign of strength, let's say keep it at 25%. Remember, test means it can go further down. So long it doesn't find solid support from the 24 cents 50 line and go challenge the levels that's been tested or went through by the October 10th event, this is not the end yet. If it doesn't stays above the yellow. Currently, yesterday and today still managed to stay above, but like I said, the volume today isn't really encouraging. Yesterday, the selling from this, the long wick at the top, combined with the volume that's higher than today, there's still 3 hours for today, so it's not the end yet. But yesterday's selling and today's rebound that isn't very strong, kind of telling us that the sideways movement may continue, and it's on the weaker side as well. So the yellow may not hold for too long if that continues. Alright, so this yellow dashed line is the next hope at around 22 cents. That's where the selling climax, the spring, actually two selling climaxes, one in March, one in June, and the spring back in April. All these stages ended closing above this level. The spring tested lower to the orange key level, but that's only as testing, like the dip on October 10th. It's not the candlesticks aren't closing below it. So that's the difference. Okay, so this is not a surprise if it continues with a downtrend breaking the yellow and come challenge this yellow dash line and even the orange. We hope to see sideways trading develops, much like what happened here at the current level, so it eventually moves to the stronger side, giving it a chance to break outside of this downward channel. Alright, so that's when the accumulation happens, when it trades sideways. Alright, so it's still too early to tell because in the daily chart, it's showing that it seems like it's getting to the end, but in the weekly, it's definitely not the case. Assuming we're still high up at the distribution and haven't even entered accumulation. So it can start accumulating at a higher level, alright? So right below the orange key level and above this white dash line, it can do it that way, without getting to below the red key level. But it's, like I said, it's still too early to tell. As long as the price is still trading at the weaker end or weaker half of the downward channel, we can't be too optimistic. Alright, so thanks for joining me today. See you in other sessions.